Hi everyone, this is Mike Elledge with Radcliffe and Associates, and I'm here with my partner Glenn Henry with Loan Depot. And we wanted to share something with you that doesn't get a lot of conversation during this time of year for buyers that are starting to do their search for property and ready to make a purchase of a home.
Absolutely, and this is, we're coming into tax season, and this is something that a lot of our clients, they're always looking at this and saying, hey, we want to get our taxes filed and then we want to start looking at a home. So sometimes, I mean, that's a great thing, but sometimes we want to look at that beforehand because sometimes the CPA that's doing their taxes, what their goals are maybe a little bit different than our goals.
Okay, how's that?
From a qualifying standpoint. So the CPA, their job is to reduce the tax liability, right? So they're looking for as many expenses as they can to reduce their income so that their tax liability is less.
Is that a bad thing?
No, that's a great thing, right?
Okay.
But from a qualifying standpoint, when you're buying a home, sometimes you might want to be a little strategic because what we want to do is we're going to look at those expenses, and that's actually being reduced from their gross income. So that makes their qualifying income less. Now, there are some things that we can add back in, and it's really just a matter of us kind of reviewing the tax return, maybe looking at a draft before it gets submitted to the IRS so that, you know, we can look at it and maybe be a little strategic in supplying the taxes.
That's great. So is this information they can find readily online, or is this a conversation maybe it's best to have with someone like yourself?
Yeah, absolutely. It's always great to speak to a lender and find out like where you're at, because where you're at today as a home buyer or a self-employed buyer, you might be ready to go. And that's the great thing. But if you're not, then let's get you into a position where you can purchase a property.
Absolutely, absolutely. So is this a situation where they'd want to talk to their CPA or accountant and then have a conversation with you? Or is there some kind of common interaction there?
I think it's both. And sometimes we get involved with the CPA to let them know, you know, what the goals are. And sometimes the CPA already knows that. But if they don't, then we can have that communication back and forth. These are the things that are going to reduce income. These are things that we can add back into the income. So it's really just it's a team effort here. And it's all of us together trying to put this together for our clients.
Absolutely. Well, thanks for sharing that. That's some great information.
Absolutely.
Again, thanks for sharing our time with us. This is again Mike Elledge with Radcliffe and Associates and our partner Glenn Henry with Loan Depot.
Thanks, guys. Look forward to answering any questions that you might have.